Welcome back to the channel. This is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. Make sure you guys like, comment, share, subscribe to the channel. Most importantly, hit the bell for notifications. We got new videos dropping every single day. And go to mgbookstore.com. Pick up the latest and greatest books by yours truly, author extraordinaire, Matthew Garland. Go to mgbookstore.com and pick up the books. Jordana, we got more questions, and we're going to answer them, goddammit. How are you?
Keep aggressive. I was like, wait a minute.
And we're going to answer all
God
the questions.
damn it. Okay.
God damn it shit.
I heard
That's something
it.
my father used to say, God damn it shit.
Okay. Well, John
Shout
Scott.
out to Pops.
Shout out to Dad,
Shout out to
for
Pops.
sure. But yes, we do plan on answering a lot of these questions. And this
Yes.
is a really good one because Tukes and I were talking offline about, this topic as well. So John Scott actually asked, my mother is currently renting her property out, but no longer wants to be a landlord. The property does have a mortgage. What is the best way for me to take over the ownership of the property? And I feel like a lot of people my age who have older parents who are just like, you know what, I'm tired of being a landlord. I don't want to deal with this. And they don't know where to start. So where should we start, Matt?
So the question is,
How do you take over?
how do you take over the property?
Yep, the ownership. Yep.
Ownership of the property. So the quickest way to take over ownership of a property is by doing what's called a quick claim deed. And when you do a quick claim deed, you are adding or subtracting owners or people on or from your property. So that is the quickest way, and any title company or real estate attorney can do a quick claim deed. Now, when you do a quick claim deed, the mortgage will still be in this person, I think he said his grandmother,
His mother.
So the mortgage will still be in his mother's name, the debt, but the ownership, if they do a quick claim deed, will be he owns the property. Now, the bank, which you have to be careful with before you do a quick claim deed, is you have to check with the servicing lender to see if there are any penalties if you were to add or subtract any owners to the property without their permission. Because some mortgages, when you do this, you trigger what's called a due on sales clause. And that due on sales clause gives the bank the ownership or the right to call your loan due and make it a balloon payment. And if you don't pay that balloon payment, meaning you have to pay your balance in full one time by a certain period of time. And if you don't do that, then they can start foreclosure proceedings on you. So I think people get too quick claim deed happy with transferring ownership, because you hear a lot of people say, how do I go buy a house and I want to do an FHA loan and put it in my LLC name? They'll buy the house and then flip it to a LLC. Now, this doesn't mean every bank is going to catch it, right? But what I try to tell people is, don't put yourself in a position for them to catch you, because although they're not going to, like, how do you monitor this, right?
Right.
Like, it's very difficult.
So,
But they still can, if they do find out, they can trigger that due on sales clause.
So I'm going to explain it for myself. I need to break it down for me because I'm not, this is all your language here. Is it because your mortgage was approved on one pretense? Like, how can you subtract? Let's say you're married and you want to subtract somebody from a deed, right? The bank's probably looking at you like, hey, we approved you under these circumstances, not this new circumstances. And that's why they would say we want all our money now, in a sense.
Well, because you're transferring ownership of the property.
Right.
So
Like, we don't know what this is. So
we
let's get our
don't
money.
know this person.
Got
We
it.
didn't vet them. So who the hell are they? And
Okay.
if you're transferring ownership, who is still paying the mortgage?
I understand
Right.
from the bank's the banks
it's
is
like,
just
if you lent somebody $500,000,
Right.
like, you want them making moves,
like what's going on, right?
Yeah, that can impact your money.
Okay, I get
No,
that.
you don't. So you got to look at it from both lenses. But to answer his question, yeah, that would be the quickest way to do it. Now, once you are on the property and you are on there for, some banks would say 6 months, some would say 12 months. So I'm going to just say 1 year. Once you have ownership for 1 year, then you can refinance. You can apply for a refinance. And now that refinance can potentially pay off the old mortgage if they qualify, right? pay off the old mortgage, which is in the mother's name, and now the mortgage can now be in his name.
Got it.
Right? Or if he wanted to put in his LLC, he can just do the refinance in his LLC's name. So now the mortgage and the deed can go in the LLC name as well. So also another way is the mother can do what's called a gift to equity sale. So if there's equity in the property, and this is something that we probably haven't discussed, and we should probably do a whole separate
There's
video.
so much. I feel like every day I come here, this is just way too much.
Nah, it's tons of information. Tons of information. That's why we're doing videos every day.
Right.
4 p.m. to give the people all the information that they can possibly need. So now if you do a gift to equity sale, now the mother can gift the potential equity in the house that the son can use for down payment and to pay closing costs, and then the mother mortgage gets paid off and whatever profits that she wanted to make as well. So that's only if you have a substantial amount of equity in the property. You can't be like maxed out in your equity and doing a gift to equity sale. It won't work. But if they have a substantial amount of equity, probably 25-30% of equity in the home, then they could do a gift to equity sale and make that happen that way too. So that's a couple ways that I can think off the top of my head where they can kind of transition. It's like a succession plan.
Yeah, pretty much.
Right? It sounds like they're doing their estate planning, prior to the last minute, and they're trying to get all the ducks in a row, especially when you have elderly parents and stuff like that. If they own real estate, these are conversations that I think everybody should be having with their elders.
Yeah, we covered this about the importance.
You got to have a succession plan. I think Cheryl McKissick said it best on Rants and Gems. Like, you got to have a succession plan and have it in place, not just in your trust and your wills, but have that dialogue, because sometimes you can just start moving that process ahead of time prior to the demise of the parent or whatever the case may be, and make sure everything is where it needs to be and all your ducks are in a row.
I love it.
So, yeah. So that's
shout
kind
out
of
to
like
John.
Shout out to John. Shout out to his mom.
His family is doing the right thing. I mean,
Absolutely.
He's coming up no matter what. He has a property, so now it's just like, and that's the great thing about real estate, because I'm sure John is probably sitting pretty right now. Hopefully.
Yeah. No, I mean, that's great. This is why we like brick and mortar, and you can pass it down to your loved ones, and you can do it before you pass. And you can do it this way, like how they're doing while his mom is still alive, and can really express her wishes. So I wish the best to both of them. I hope it works out for them. Good question. Good question. All right. What's your thoughts on this subject? Did I miss anything? Because I just kind of freestyled that real quick. So, guys, let me know your thoughts in the comments. Again, like, comment, share, subscribe, and go to mgbookstore.com and pick up your latest books. Matt Garland here, NMLS number 58700. But I'm better known as MG the Mortgage Guy. Peace.